Hey everyone, in this video I'm going to look at Nvidia, Amazon, and Alphabet to answer which one I think is the best AI stock to buy for 2024 and beyond. Interestingly, all three of these stocks are on my list of top 24 stocks to buy for 2024, so I'm comparing among the best of the best here to determine which one I think is the best in class. So let's jump in, let's take a look at these three and answer which one is the best.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
All right, so the first metric I'm going to compare these three on is revenue. But before we look at these three individually, let's take a look at the total addressable market for artificial intelligence. According to Statista, the total addressable market for artificial intelligence is expected to grow to $1.85 trillion by the year 2030. That would be up significantly from the $207.9 billion in 2023. Artificial intelligence is popularized by large language models like ChatGPT, but there are more applications like driverless car technology, recommender systems, and more. The companies that stand to benefit from the growth in this AI surge is companies like Amazon, Nvidia, Alphabet, Microsoft, and more. Investors getting in today could realize exponential returns from investments that capitalize on the growing effectiveness of artificial intelligence. All right, now that you've got an idea of how massive this market is going to be over the next few years, let's look at each individually. And what jumps out at us is Nvidia's recent explosion in revenue. 205% increase in quarterly revenue compared to the previous quarter. Nvidia is really the company that has benefited the most from the rising effectiveness of artificial intelligence. Many other companies, including Amazon and Alphabet, are making progress, making improvements, seeing increases, but none to the degree that Nvidia is experiencing. And you can see longer term, Nvidia's revenue growth has been solid, but nowhere near what it's been in the last few quarters. Now, analysts expect Nvidia to have an excellent year in 2024 for revenue growth to continue to be explosive, but then revenue growth to settle down starting in 2025. Meanwhile, Amazon and Alphabet have also done a solid job growing revenue roughly at the same pace as Nvidia over the last decade if you exclude this recent surge. So revenue growth over the next decade, if I were to guess, I would say again Nvidia will have the lead compared to the other two, although I don't expect Nvidia's growth to be anywhere near this level longer term. Although I think 2024 is going to be an excellent year. Starting 2025, I think the growth rate is going to moderate significantly back towards its longer run trend. So the next thing I wanted to compare these three on is the operating profit margin in a trailing 12-month period. Again, we see Nvidia's explosion here due to the rising revenue, but longer term, we can see Nvidia and Alphabet have been pretty close in this metric. Nvidia slightly better, although more volatile than Alphabet, and that's understandable. Nvidia's business is more cyclical. Nvidia's business is more hardware centered, whereas Alphabet is more services, right? Google search, YouTube, mostly the cloud is coming in. And then finally, Amazon is way lower than the rest at just 4.76%. It's going to be a while before Amazon can even approach 10% operating profit margin. Amazon's business is not a profit lucrative business, especially the fulfillment and logistics side of the business. It does have the AWS cloud business that is very profitable. Operating margins 30% in the most recent quarter in the AWS segment. However, most of its revenue comes from the e-commerce logistics fulfillment business, which is bringing down profitability overall. Amazon makes up for that by its massive scale. I wouldn't be surprised if Amazon's revenue exceeds 600 billion in 2024. And so that revenue, that would be more than twice what Alphabet will likely produce in 2024 and multiples more than what Nvidia will produce. So it's got smaller margins, but a larger revenue base to generate those profits from. Similar cash flow from operations to sales in the trailing 12 months, we get a similar story here with Nvidia and Alphabet being neck and neck and Amazon being the third place finisher. Again, same factors here to think about, in that even though Amazon's much lower, Amazon generates cash flow from operations on a larger sales base, and therefore its cash flow from operations is absolutely massive, even though the percentage is smaller. Going forward, I think Amazon will make good progress catching up the other two in terms of cash flow from operations to sales. I expect Nvidia's to come down a bit and Alphabet to take the lead over the next couple of years in this metric. So this other thing I wanted to highlight is a really important business metric, and that is return on invested capital. This is basically measuring how good a company is at using investor money to generate profits. And Nvidia here taking the lead at 52.18%, more than twice the rate of Alphabet. And it's been about at the same as Alphabet, if not more, during certain periods of time, during the cyclical peaks for Nvidia's business. And this has been a good story for Nvidia. One of the reasons why its stock price has exploded the way it has in the last 2 decades is that it takes the capital that it has and it makes effective and prudent investments in innovation in next generation technology, continuously improving on its technology and selling those technology advancements to customers and generating strong profits from that. That's a lucrative skill to have honed in, and that's one of the most attractive reasons Nvidia stock has exploded the way it has, and why I've recommended Nvidia stock as a buy. Alphabet has also done a good job, and Amazon. They've both done a solid job in this metric. Amazon will likely catch Alphabet or close the gap between Alphabet in the next year. Remember, Amazon overinvested during the pandemic because of that surge in consumer demand, and now they're growing into that. Management said that they're going to be decreasing capital expenditure in the next year. So that lower capex combined with increases in profitability is going to boost Amazon's return on invested capital. We've already seen that, and you've seen Amazon over the last decade improve this metric. It was all the way above. It took the lead from Alphabet in 2021, but then those overinvestments started to bring it down, and now it's coming back up as it's growing into those investments. This trend will likely continue in 2024, and that's why I say Amazon will close the gap to Alphabet on this metric. However, all three are doing an excellent job in the return on invested capital metric. The fundamental financial theory behind this is that as long as you're generating a return on invested capital that's higher than your weighted average cost of capital, then you're doing a good job. You're making money for shareholders because you're making more on the money that you're investing than it costs you to get that money. So you're increasing shareholder value. And the cost of capital for these three companies are all, I'm estimating here, they're likely to be less than 10%. So they've done a good job in increasing their return on invested capital above that of the weighted average cost of capital. Similar story with return on assets. Now this excludes some factors here. We're just looking at the assets that the company has and what return it generates on those assets. So it excludes some factors in its metric. The next thing I'm going to look at is return on assets, and return on assets includes more than the previous slide did. This return on assets also includes assets that the company is not investing, and it punishes companies for keeping cash that they're not using. And The most notable is Alphabet because it hoards a lot of cash without putting it to use, and this punishes them for doing that. This metric punishes them for doing that. Investors don't want companies to just sit on cash. They want the company to either use that cash or return it to shareholders. And so you could see these metrics are lower, and 41%, 17.8, and 4.33 for Amazon, Alphabet, and Nvidia, again in the lead here, again demonstrating that it is the best in class in this metric. Finally, I wanted to compare these three on valuation, and I chose to use the forward price to earnings ratio. Amazon being the most expensive out of the three at a forward PE of 32.42. Next is Nvidia at a forward PE of 29.5. And finally, Alphabet trading at the cheapest valuation of 19.16. So if I was to pick one of these three AI stocks to buy today, I would pick Alphabet. And it's primarily because the balance of all the factors. If Nvidia and Alphabet were trading at the same price, I would pick Nvidia. It would be a no-brainer. But because Alphabet is so much cheaper than Nvidia, 1/3 cheaper, 33% cheaper if you're looking at valuation, I don't think Nvidia's performance is going to outperform Alphabet by that much over the next few years. And so for that reason, I would take Alphabet as the best AI stock to buy now. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.